Do you live in a high tax state? The new SALT deduction changes could be your biggest tax break in years, or do nothing at all.
Welcome back to Full Throttle Finance, a financial literacy podcast where we take complex financial topics and we break them down into relatable, practical discussions. My name is Felicia, and I am your CEO at Clean Bee Consulting.
And I'm Allie, co-host and senior bookkeeper here. Whether you run a business or want to understand money better, we're here to help you build the clarity and confidence you need. Last week on the podcast, we dug into 4 big changes in the Big Beautiful Bill: the inflation adjustment to tax brackets, new deductions for the car loan interest, the senior-only deductions, and the boost to the child tax credit. We broke down how each works, shared real-life examples, and weighed the pros and cons so our listeners could see exactly where they stand come income tax time. Today, we're talking about something that sounds like it belongs on the dinner table, but actually belongs on your tax return, and that's the SALT deduction. And no, we're not here to argue about sea salt versus table salt. Okay, maybe we are. This is the state and local taxes. And the Big Beautiful Bill just turned the shaker way up for some... That was funny. Okay. Turn it upside down. Turn it way up. The Big Beautiful Bill just turned the shaker way up for some people while leaving others with the same bland serving they've had for years.
Yes. So I think let's maybe start at the beginning. Like Ali said, SALT stands for state and local taxes. It's a deduction that lets taxpayers subtract certain taxes that they have already paid. Things like your state income tax, your property taxes, and then sometimes even in certain circumstances, sales tax. And it is excluded from your federal taxable income. You can't deduct taxes like your federal income taxes or your Social Security taxes or transfer taxes if you sell properties. You can't deduct stamp taxes, HOA fees, estate or inheritance taxes, or even some charges for sewer, water, and trash, though. So the SALT deduction specifically is just income tax, property tax, and in certain circumstances, sales tax. Think of it like this. You earn money. The state takes its cut, and then the federal government also wants a cut, right? The SALT deduction is meant to keep you from getting taxed twice on that same chunk of money. It's a form of double taxation relief, although I would say that there are ongoing debates about its effectiveness and its fairness in achieving that goal. And so this is the kicker. You can only use the SALT deduction if you itemize your deductions on your tax return. So if you take the standard deduction, the SALT deduction does not apply to you in any way, shape, or form. You can't take it. And that's why this isn't something that everyone talks about. For a lot of households, right, the standard deduction is much bigger than the total itemized deductions that they might have. So they never even touch or talk about SALT with their tax preparer or through whatever platform they're filing their taxes on. But for certain taxpayers, especially homeowners or high earners in high tax states like California and New York, this deduction can actually be worth thousands.
So basically, SALT is a tax break for state and local taxes you've already paid, but there's a limit on how much you can deduct, and that limit's been a political hot topic for years.
Yeah.
Hasn't it?
Yes.
So to give a little background, the SALT deduction has been around for more than a century. And for most of that time, there was no hard dollar limit on how much you could deduct. If you itemized and you had $30,000 in state and local taxes, you deducted $30,000. Pretty straightforward. So
Easy math.
right. And that changed, though, in 2017 with the Tax Cuts and Job Act, which kicked in for the 2018 tax year. That law capped the SALT deduction at $10,000. And that's not $10,000 for property taxes and $10,000 for income tax. That's $10,000 combined. So you're married filing separately, you just get $5,000.
Yeah. And that impact is huge, especially again in your high tax states like California, New York, New Jersey, Illinois. Homeowners in those states were used to deducting all of their property tax and all of their state income tax on their federal tax returns. So hitting a $10,000 ceiling was pretty crushing for a lot of people, right? And, your middle income houses in low tax states basically didn't even matter to them, right? Because if they only paid $5,000 or $6,000 in property taxes a year, then you live in a state like I live in Washington, right? There's no state income tax here. And so like you wouldn't ever even really hit that $10,000 threshold. And you probably are just going to take the standard deduction, right? Because there's no reason to itemize because there's no benefit for you in that situation. So here's an important detail, though. That $10,000 cap was always supposed to expire at the end of 2025, which meant that Congress either had to extend it, they had to change it, or they had to let it revert back to the old unlimited version. And that's where the Big Beautiful Bill comes in with its own twist. So enter the Big Beautiful Bill, and starting in 2025, this tax year, the new legislation that the $10,000 SALT cap that we've had since 2018, it's changed. So now effective this tax year, it has raised to $40,000 for single and married couples that file jointly. If you are married filing separately, then you're only able to take $20,000 of that deduction. There's also an income phase out that is baked into this provision. If your income is over $500,000, then you'll see the benefits start to shrink until it phases out completely.
So this isn't designed for ultra high earners making millions a year, but it's targeted at the upper middle class and high income earners, especially in states, like you said, New York, California, Illinois, where property tax and income tax stack up really, really fast. So
yeah. And a fun fact, I think it's New Jersey that has the highest property tax rate.
Really?
Yeah, I'd seen like something in posts that like come up on my social media. I was talking with a really good friend of mine about property taxes in Texas on something that I was working for a client project. And then they had just gotten their property tax bill in Colorado. And then at the same time, I got like a blip on social media that was like, look at the property tax across these states. And New Jersey was like, I want to say it was like 3 times.
Oh my gosh.
Like what Colorado was. Like you think about that. Like a property tax goes to be divided up amongst, let's maybe say 3 sectors, with 80% of it going to education, and then like 10% going to roads and 10% going to like whatever else. But like 80% of 600, that's $480. If a teacher is paid $20 an hour, that's 24 hours of one teacher's salary.
Yep.
That we collected from one property. I think that's like what people don't understand about property taxes, because they don't get to see where it goes. They don't get to like directly take the money and go give it to the school.
No, they don't.
Like here, like wouldn't that be some shit? Or like if property taxes, instead of going to the government, to having the government disperse that money, what if it's like you're responsible for going to your local school and giving them the check that is the equivalent?
I mean, to be completely honest, I would
80%.
feel a lot better about shelling over
Right.
the $1,200 or whatever that I pay on my top property taxes if I was literally taking a check into them every single year and was like, here you go. I hope you guys put it to good use.
Yeah, exactly. And like I think honestly, like schools should be like, this is how your budget or how your taxes are gonna be used, right? Like I don't think that that's a far stretch on any side of the fence, right? But what does that establish? People actually get to see the tangible aspect of like where their money goes, right? If you had to go down to your DMV to, give them the money for like the roads,
100%.
right? Like maybe you would voice your concerns about where you really want to see improvements in our roads, or maybe you'd vote more diligently in your state and local elections, right? So I think there's like a big accountability factor that like the accountability comes off the individual as a taxpayer who's paying property taxes, and it goes to the government. And then we just like assume that the government understands how to budget. And the issue is that the government doesn't know how to budget, especially millions and millions and millions of dollars. Because like not only that, They're doing all the admin of chasing. They're doing all the admin of like issuing the property tax statements, of chasing the property tax money, budgeting, of making sure that those funds go out. Like that's a lot of fucking work.
It
And I'm
is.
sorry, but like there's not enough competent people in every single state to be able
I
to do that
completely agree.
effectively. Yeah. Anyways, tangent there. But yeah, so I found the property
All right,
taxes.
give it to us.
So states with the highest median property tax amount. New Jersey, the average median property tax amount is $9,413.
Oh my gosh.
New Hampshire is second highest at 7,700. Connecticut, 6,944. Washington sneaks in there. And so that's interesting, right? Because Washington doesn't have a state income tax. We just have the property taxes at that point. So like Washington, right? You're
Kinda
still not
compensating a little
necessarily.
bit.
Yeah, like but that's the thing is that they just keep increasing the property taxes here in Washington instead of reassessing the current budget that they have and making sure that the funds are being used appropriately. Washington just keeps adding more and more and more to the property taxes on, this is property taxes on $1 million homes.
Yeah.
Like there's very few homes in this area that are less than $1 million. And then New York comes in after Washington. So perhaps we might have had our top high. Well, no, like California and New York do have the highest income tax, but like they don't necessarily have the highest property taxes, right? But New Jersey has income tax and has property tax. New Hampshire has income tax and property tax. Connecticut has both of them. Washington has no state tax, but they do have property tax. And then New York has both property and income taxes. It's interesting, right?
I think it's interesting because you think about like California and New York, they're a lot like Washington where they've got like these really high dollar homes. And then you have like New Jersey, New Hampshire, Connecticut, which I don't know about you, but I'm not thinking about these states as being the ones with like super, super high dollar homes. And they're the ones with the highest property taxes. Same. This isn't designed for ultra high earners making millions a year. This is targeted at upper middle and high income households, especially in states where property and income tax stacks up fast. And for the first time since that 10K cap came in, high income state homeowners might actually feel like they're getting some breathing room. All right, let's make this real. Numbers on paper are one thing, but like let's talk about how the SALT deduction change actually plays out for two people in very similar situations.
Yeah. So let's do example one. They're a married couple that lives in a high tax state, a state that has high income tax, right? And so you can picture a married couple. You can picture a married couple. They earn maybe $250,000 a year and they pay something around $15,000 in state income tax. Then they pay about $18,000 in property taxes. That is about $33,000 total in state and local taxes. Under today's $10,000 cap, they would only be able to deduct $10,000 of that $33,000, right? So they would be double taxed on $23,000 worth of income. Now, with the One Big Beautiful Bill, will not have to pay tax on, right? Under the new provision with the Big Beautiful Bill, it's a $40,000 cap. So that means that they're going to be able to deduct the entire $33,000 that they previously were not able to deduct in full, right? And so if they are in that 24% tax bracket for the highest part of their earnings and their wages, right? That extra $23,000 deduction means over $5,000 less in taxes that they're going to owe federally, right? And so take a very similar family, right? The same married couple, but they live in a low tax state or a no income tax state, right? And so they earn that same $250,000, but they live in Washington. There's no state income tax. They pay maybe $6,000, $7,000 a year in property taxes. That's what we saw, right, for the average for Washington. And so they don't really gain anything, right? Like they would have been able to deduct the full amount under the $10,000 limit everything in excess does not matter to them in any way, shape, or form. So they're not going to see a change on their tax bill, really, right?
This is what we were talking about. This could really help you, or it could just do absolutely nothing for you at all.
Nothing. And nothing.
So the SALT deduction change in the Big Beautiful Bill isn't one of those one-size-fit-all wins. For some, it's thousands of dollars in savings every single year. For others, it's nothing. So if you live in a high-tax state and you're paying well over $10,000 in combined income, property, and sales tax, this could be the biggest federal tax break you've seen since 2018. But if you're in a low-tax state, your total SALT is already under that 10K mark. Your return next year will probably just look the same. So this change probably won't even affect you.
Nope. And that's why we want to hear from you. Is this change actually going to make a difference for you in your individual tax situation? Or is this just another policy that sounds big, but it's not going to impact you? I'll let you know. Not going to impact me at all.
Not me either.
No. So send us a DM, leave us a comment, or share this episode with somebody who might actually be impacted by this change. And if you've never heard of the SALT deduction before today, tell us that too. We want to know how much this topic has been on your radar, or if it's just been completely off your radar and never talked before, right? So next week, make sure that you tune in. We're going to be breaking down some more Big Beautiful Bill provisions that do impact a different section of taxpayers, and these might surprise you. So make sure that you're subscribed, and as always, keep your finances in gear and make sure that your deductions stay legal. We'll see you next Friday.
Bye.
Bye.